Like if I put in all-time high here, like this is what you see in the chat. Like if we look at those dates, 117, 114, you know, no stops are safe above them. Still very bullish on making it to all-time highs, so keeping trades safely exposed to the stop and profit is key. That's 114. And then we can see 117, market's up 400 points. You can see keeping the long trade was key. Hope everyone listened and is exposed to all-time high. That's the 14th and then the 17th. Remember those dates. Let's go back to the daily real quick. The 14th is right here. 15, 16, 17th is right here. You know, it's never made a low past that day. So holding from then was the right way to go about it. This is into the wicks and spikes that formed the lows prior to the trend break. Like you can see, this is exactly where the volume drastically changes. And I'm also wondering about the reversal on 3 consecutive lows that we've been seeing almost every single day at the lows. When we make a consolidation, are we interested in making 3 consecutive lows and they're just slightly lower lows before the reversal. And just like we had a blue and white line going up, we have one going down, which is actually quite intriguing to me because it has never been tested like the one that we have here. It has been now tested. I'll turn it down. A similar style of line. These levels in here, as we pass them, do become beat points as well, even if they are strained. They're good to acknowledge due to the fact that when we come back to that level, we'll be coming back to a node, to that node specifically. Because that's a good node for the imbalance at the blue dashed. If I had to say imbalance inside of that range, getting to that general level prior to that time is on the table. We do have a spike that comes to mind, like this one. Maybe it over here. 3rd consecutive low on the short term just formed as well. I think we managed to make something different in this trend versus everything else. We managed to go 1, 2, and 3 consecutive lows separated by green candles. So the first line is the first of the 3 lows, where typically that becomes a B point that's kind of like reinstated again, where it's basically almost at it. The question is, does it lead through that into a trend break that forms the spike? And it might look like coming back to a 261. The old 261 is actually on top of the old 61, which is a level that's good for overnight consolidation. That old 61 that didn't get tested. It reminds me, like, a lot of the 61 that we didn't make it to at the end of the day yesterday. Like, it didn't manage to go to a 61. But then today, where we are right now, is that 61 that it struggled to make so many times, never did it. Now we're there. And I'm like, this 61 never budged. Never made any kind of movement on it, which makes me think we'll end up back at it as well. That's the other side of the big node. The event at the end of the day could have a lot to do with this as well, the imbalance. But it could be the imbalance itself that gets us out of the consolidation and back to this untested 61. It is very much like a spike that took longer, not much different than what the process is. What is a spike? It takes a movement with roughly the same speed and time and takes it back to the place that it started within roughly the same amount of time usually that it left it. And it did that many times over here. And on the other side of that node is the 61 that wasn't tested properly. And I find that intriguing because of the fact that, you know, doubling this process that we have here is basically getting to that 61. For whatever crap we're doing in here, we double that up, we end up at 61. And sure, does it have to end at doubling? I mean, no consolidation today has ended at doubling. So this one might, sure, but I mean, it is a chance that we do more than double. Like every other time, we do triple, quadruple, besides the consolidation. Like how much more of this consolidation did we manage to do? So what could this one be capable of? So we're at the spot that marks the B point and imbalance. Anybody that was targeting that level wants to make sure that it's absolutely safe. Continue holding for the imbalance and that you take off enough profit at the B point and range to make sure that you're paid for the B point. At the end of the day, it's a return back to the POC. That's something we could find ourselves doing multiple times. We have yet to make it through it to test it from above too, which I do believe we'll do. But it's an appropriate place to have the imbalance from as well, so it's where there's the biggest chunk of volume and the most amount of people have traded at that point. When we can see that it's all of a sudden, after an environment that doesn't favor long trades at all, suddenly reverses on 1 minute, where you could say that there's, you know, a few milliseconds at the best price before it starts leading away from it. And then what we do is anybody that isn't in from that, you know, small time frame is likely to be in from after the trend break. So typically we like to go back to try and get the people of the trend break. Like, what are the odds that this high is made there particularly so that we can come back down to it in the future? This trend has been formed. Typically whenever we do get beneath the neckline, we like to make another inverse head and shoulders to correspond with the head and shoulders. And to this point, everything that we have managed to do in this smaller area has amounted to being an S-wave, which does give me deja vu to how we were managing some of the other areas of equal size in the past. Like, is it not true that this entire environment and everything that we did in here is actually incredibly similar in size and diameter to what we are doing right now? And of course, with the amount of 61s that we've been doing lately, you know, their value in putting the 61s on top of this most recent push, understanding that we are at 61% retracement, and that we could in fact be making an inverse head and shoulders out of the neckline. You know, I just looked at this again without that on there, and I can see that, you know, the theme that they had for this consolidation was to make a low with a lower low and a higher low to come into this. I was just looking to see if they had any sort of similar kind of movement there, but not really. Small triangulation for the imbalance. A little bit of a anticipation consolidation, where we are at the middle of an S wave at the tip of a triangle, and the tip of a triangle happens to be the event in question. And now, of course, the 61 is held, so we know that 61's held. Now what about this one? We're at another 61 here. Turn this down a little bit. I think it's safe to say that it made it to the circle for the imbalance though, but that is the idea. The price action was clear. When we were at that bottom, we were at that low. We knew the idea was to come back to that level. I drew a circle. This level up here is the ultimate level that I think we're going to spend the most time at though, funny enough. And when we hit that level, it could come right back to here. Literally. Beware of imbalance right now. The imbalance happened from my circle, well, which is an accurate calculation of the time and distance that it would take. Not the journey involved to get there, but where it will be at exactly what time. That was calculated clearly. Well in advance too. About an hour in advance. It's rather an incredible movement. Unfavorable for many people, but it is very particular. And they managed to hit all of the parameters towards the end of the day. They managed to take this entire, you know, area that we did down here and double it up again to get to this point. We are now. Well, 188,200 when we get to the blue and white line. Like, that is a level which is kind of problematic. Influences a movement back to the nearby red zone, I'd say. If we can break it, like, that's huge. So it's not something you give your long trades up over, but something that you understand could take people's long trades from them if they drag their stops too tightly. At the end of the day, it's what it takes to be exposed alongside the institutions that make it as difficult as they can make it all the way to the end of the day every day. 2025.
Now, hey, I'm going to move the arrow up again, okay?
Now, of course, obviously there's no way that any trades from now on out
or well, from today could be turned into losses. You have more than enough capacity to drag stops into profit, especially when it's ever in the middle. It's always a time where you want to make sure that you can protect it. It can make a chop around these levels as well. So the 61 could get a hell of a chop throughout the night. It could involve this general area. What if it is the same size as this thing? You know, like just doing that in here. And it would be right across that big old chop from the other day. Roughly the same size as it. It fits the profile. We'll do that. Yeah, I'd like to think we're gonna do that. But over my dead body, we don't see that that 61 again. Like that 61, it doesn't look like it's hitting now because we're hitting the red zone from above. We're definitely gonna see it throughout the night at some point, and I don't think it actually wants to work very well. You know, something tells me that the next time we're involved with the red-yellow line, that it's going to be thinking about breaking it properly, contrary to popular belief. People will be thinking it will give them the same experience as before. I think that's bullshit. You know, we do something new, something they don't know, something that throws them off. Like, not something they're familiar with. Institutions aren't trying to give money away. So, I find it interesting that everything that everybody struggled with on that dump down was instantly bought back out to the point that it all began from. There's my point for the end of the day too. That's exactly the point that it left the red yellow line and it's the close, and that's where we ended up.